If you're using indicators, you need to stop immediately because you will almost certainly end up losing money. There are thousands of YouTube videos showing you different strategies using indicators, but they are all wrong, and I will prove it to you. If you're ready, let's get started. Hello everyone, it's Petko. I hope you're having a beautiful day, and in this video I'll share with you why you should stop using indicators, especially if you are trading manually. And I will bring you back to the 2nd of February this year, or this was just last week, when I had an extreme situation right at that point with a robot that was supposed to sell at a very good moment, but it didn't, and I've missed great profits passing another FTMO challenge. And this robot actually worked really well until the moment, and I saw that at 10 AM the price went inside the envelopes, and at 11 it went outside of the envelopes, which was the entry moment, but the robot didn't do anything. And I was really frustrated because I never had issues with this robot until the moment, and I've spent hours investigating the case. Just to make it clear to you, the strategy behind the robot says that it should sell whenever we have a bar that opens below the upper band, and if the next bar opens above the upper band, at the opening of that bar we should have a sell order placed automatically. And because envelope indicator is applied to close price, this means that at the opening of that bar, the true value of the envelopes is the price at which it was during the closing of the previous bar, or that is 109.97.6, and the opening of the next bar was at 110.048. So basically there was the confirmation that the price is higher above the envelope and it should have opened a short trade, but it didn't. And after spending a few days investigating the case, I have figured it out that the problem was 1 hour earlier. If I put the mouse on the envelopes during the previous bar, you will see that the value is 109.92.6. So this is the value that the envelope had at the closing of that bar, or this is the very same moment as the opening of the next bar. And if I show you the opening price of the next bar, it is 109.93.6, which actually means that the opening of this bar was above the envelopes at this moment. And there is nothing wrong with the robot I'm using. It followed the rules of the strategy perfectly. Simply put, the indicators over MetaTrader or on any other platform that are based on previous bar closings are repeating during the current bar. And if we look at the past, we see very misleading information. This bar is very obvious below the envelopes, but the truth is that at the opening of that bar it was above the upper band of the envelope. So let me summarize it one more time, as it might sound a little complicated. The strategy that I follow says clearly that I should sell if I have one bar opening below the upper band, and if the next bar opens above the upper band, I should sell. The very opposite thing is right in here. We have one bar that opened inside the envelopes or above the lower band, and if we have a bar that opens below, at the opening we should buy, and you'll see that right in here the robot bought. But in this case it actually didn't sell because this bar was not inside the envelopes at the opening. One more time, the opening of the bar was at 109.93, and the value at that moment with the envelope was at 109.92.6, which means that the robot didn't detect a bar that was below the upper band of the envelopes. And this is not just with the envelopes and with this strategy, it is with all indicators that traders use. And before I give you more details and explanations why that is so misleading, I want to say huge thanks to the sponsor of today's video, Black Bull Markets. Black Bull is a CFD broker that allows you to trade manually and automatically on different platforms, and they are regulated by the FSA. On their website you can see that you can trade gold commission free, and you can start with no minimum deposit, which means that you can start practicing even with $10. As well, based on the account type you select to use, you can use leverage up to 1 to 500, which means that if you start trading with $1,000, you can open positions up to $500,000, but that's really risky and you should be really careful with the leverage. However, if you keep your risk low, the combination between high leverage and tiny spread starting from 0.1 lot will increase your chances of winning more money with every trade. You will find a lot of information about Forex, shares, commodities and crypto, depending if you are a beginner, an intermediate or advanced trader. What's quite interesting, they have the program Refer a Friend, which is not common with the CFD broker. So basically, if you decide to test the broker and you like their services, you can refer to a friend and you both will earn from $100 to $250. If you check out the conditions on their website, you will see that depending on the first time deposit, you will each receive $100 or $250. And this is just an extra capital that you and your friend can use while trading. And what I like the most about Black Bull Markets is that they have MetaTrader and TradingView platform, and I have plenty of demo and live accounts to test all of the strategies and robots I use for my personal trading. And as you may know, MetaTrader is a free platform, but TradingView comes with a paid subscription. So with Black Bull Markets you can have TradingView Pro subscription for free. I will drop a link down below in the description. If you use it to register for the broker, you will be able to use TradingView for free, so you won't bother with monthly subscriptions. And with that being said, thank you guys for sponsoring today's video, and now let's go back to the indicators. I really hope that the example I shared with you was not too complicated, but if I really have to summarize it and make it as simple as possible, I should say that looking back on charts could be really misleading, and you might come to a conclusion that one indicator works well with certain parameters, but once you start trading it, you will see that's not really the truth. However, let's imagine you use just a simple moving average. Whenever the price goes below the moving average, you would sell the asset, and once the price crosses upwards, you would be buying the asset. And if you spend some time observing charts, you will see that it really works great, but that's not really the case. And there are even worse indicators like the zigzag. The zigzag indicator will show you when is the best time to buy and when is the best time to sell by displaying the tops and the bottoms of the different trends on the different time frames. And every trader at one point finds out the zigzag and gets so excited. You were just misled by the indicator, because when looking back on charts is one thing, and when trading with indicators is absolutely different thing. And that is why I use indicators only if I trade with expert advisors, because we could be wrong, but the EAs are not. And that's why in most of my videos I include expert advisors. I will not include such in this video, but here is one where you will learn another strategy, and I have attached the expert advisor or the robot for free so you can test it out and see how actually it works. As always, I wish you a wonderful day. Don't forget that I love you. Check out all the links down below in the description, and I will see you in the next video. Cheers!